Good day, everybody. Thank you for joining me on the channel. Hbar is looking like it's ready for explosive growth in Q4, and in today's video we will be breaking down some potential short to mid-term targets. Nothing that I say is financial advice. Let's dive into the content. So looking at Hbar here on the weekly time frame, I have this ascending resistance trend line and this ascending support. Now between both of these trend lines and this channel, the last point of contact was on support back in November of 2024, where we had this massive breakout leading into January at the 40-cent high. Now, because we've had the last point of contact on support, it leads me to believe that within this channel, we are looking for a potential touch point along this ascending resistance line in the near future. Now, this will be the sort of area I look at the macro targets a little bit later in the video. But first off, I wanted to break down this current price action and what's actually happened and how we could potentially actually reach these targets. Now, you're looking at somewhere between $1.60 to $1.80. Now, stick with me and I will explain why. So what we've actually had is this run up here in March 2024, which ran us up to roughly around 15 cents. Okay. And this was a level of resistance where we actually pulled back and created this ascending support line in October, November 2024. We then had a massive rally which took out this previous level of resistance in March and took us up to the 40-cent highs from that we hadn't seen since sort of 2021. So this was an area that was expected to be a strong level of resistance. It was resistance in the past, and this is where we eventually came in for about a 67% correction and actually retested this previous high of March. So really and truly, it's beautiful structure because we had this run up into resistance. We then corrected to the ascending trend line, broke out for a couple of months, ran into another key level of resistance, and then we came back to the previous high and actually turned it into support before going for another break. Now you can see that along the way, we are sort of along the way back up to this 40-cent high, we are running into these obstacles, okay? And we're getting these pullbacks, but I think these are very healthy corrections for continuation higher. And what we've actually had is in a theory, in this massive correction, that 67% correction, we started to build this double bottom. And we have this level of resistance in the past at 20 cents that was actually broken in July. And that's when we've actually ran up to this local high of around 30 cents and seen a pullback since, you know, July coming into September. So I think that we are in a double bottom breakout here. This is just one of the patterns, and we go from the neckline of the double bottom down to the bottom of the structure. And when we actually do get the breakout, you can see that the technical target does bring us back up to roughly 35 to 36 cents, which is these highs from January 2025. So I do think this is where we're trying to get to in the short term, back up to this high, but there is much more interesting targets other than this little double bottom. And I say little because potentially what we actually have is a macro bull flag structure, okay, which we've already broken out from. So hear me out. This is how I think we could potentially get towards those sort of $1.60 to $1.80 targets. We have this flag formation. So this whole correction was basically the flag, okay? Now the pole is what occurred before from this key level of support. This is where we had the impulsive move up to the 40-cent high. So we have the pole breakout, and then we have the flag correction, which brought us back down to the previous high of March. We created a double bottom on this previous high, and now we got the breakout of this flag formation in July. So I think that what we're looking to do here is clone this flagpole, and this is how we get the breakout target. Okay, so when you actually break out of that level of resistance, you can see that it actually gives a price tag. You're looking at around $1.80 on this flagpole, on this bull flag structure. And I think this is the macro move that we're sort of looking for here on Hbar, and I'm going to stick with that unless we see the 20 and 55 EMAs lost the support. Okay, at the moment, Hbar's had a healthy retest the past few weeks, back down to its 20 EMA, this yellow line, sitting at roughly 22 cents, sorry, in fact. And we also have the 55 below at 18 cents. So as long as Hbar is above its weekly 20 and 55 EMAs, we are in an uptrend. And as of 2 weeks ago, we actually had a healthy retest to this EMA for support, of which I'll dive into in a second because there's another structure that we're going to look at. But really and truly, this is the macro play that I'm looking at here for Hbar. It's a massive bull flag pattern, okay, where you have the flagpole, up to a level of resistance, you correct back down to a key level of support on the previous high, and then you look for the breakout target, which roughly is about $1.80, and you can see that would bring us up to this ascending resistance line that we haven't actually tapped, and the last point of contact was on this macro support. So again, just to confirm with you guys, this is what a bull flag structure looks like. You have a strong uptrend. You then have this corrective phase back down to a key level of support before getting the breakout. And I think that H-bar is somewhere here in this break. Okay, if we look at the pattern, you can see we've had the breakout, which was back in July. And right now, I think we're somewhere here on the break towards that higher target, sort of pushing into Q4, potentially Q1. So at the moment, the structure looks fantastic, and that's on the weekly time frame. And again, just as long as we're above these two macro EMAs, I really wouldn't be concerned. This is fantastic price action. We've got the double bottom, we've broke out, retested the neckline, we've got the bull flag structure, we've broken out of the flag formation. It looks like we're on our way. So what I wanted to show us on the daily time frame as well was another potential bull flag structure, and this would, in the short term, provide some sort of higher targets. These would be my sort of short-term targets as well. So it looks like we also have this formation here, which is some kind of falling wedge, or again, another potential bull flag on a lower time frame. So this is on the daily time frame, where we have the flagpole, which has brought us up to this 30-cent high in July, and then we've been correcting this falling wedge, and we've actually got a breakout in September, and now it looks like we're retesting the flag resistance for support. So in theory, what I'm looking at is we've had the pole led up to 30 cents. We've then had this falling wedge correction, okay, and now we've got the breakout, and at the moment, it looks like we're trying to hold above the previous resistance on this trend line as support to get the next leg up. Okay, and the breakout target for this bull flag on the daily time frame, we clone the flagpole, we bring it up to where we break out, and this gives us a rough target of around 52 to 53 cents. And there might be some confluence here with that. If we get a fib on from the local low of this correction, which actually bottomed out in April, going back to the January highs, you'll notice that the 52 cent mark sits very close to the 1618 at 55 cents. So I think in the near short term, we're trying to get to this the 1272 fib extension. I think we're trying to get to 55 cents, and we've got another bull flag that's actually forming here, looking for a breakout. So as long as we can hold above 22 to 19 cents, these are the key Fibonacci areas to hold. As long as H-bar is above sort of 22 to 20 cents roughly, I think everything's cushy here. And we could potentially be looking for another major move in the short term. And this would be from current prices going up to that 1618. You'd be looking at another 136%. And who knows, that could happen, you know, going into sort of mid to late October. So fingers crossed. I think that's kind of what I'm looking at here for H-bar. And again, that $1.80 target is pretty interesting, okay, which is the macro bull flag that we was looking at. And I'll show you why as well. Because if we get a fib on from this cycle low, which was in December of 2022, going to the all-time high, the 1414 fib extension sits at $1.84. And if this is a macro sort of bull flag that we actually have here, this is the macro one that we was looking at the start of the video. Again, just getting the breakout target, we'll clone the pole, drag it up here, and you'll see that where we've actually broke out, the breakout target does sit very close to this 1414 at $1.84. So there's some confluence with the Fibonacci, there's confluence with this bull flag structure, and I think at a minimum what we'd be looking at for the cycle is between $1.23 and $1.80. And the key key support to hold is, again, 22 to 20 cents, 19 cents. As long as we're above that, I think we're dandy. I hope you've enjoyed the content, guys, from Chart Nerd TA. Take care. Peace out.